Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on today's show?
Jim, today we're going to talk about why PJX is falling, even though a drill program is underway, and why endurance gold is creeping up, and why Perpetua Gold has jumped up in recent.
Why has PJX Resources dropped below 20 cents?
Well, a simplistic explanation could be that when they announced on July 8th that they had been granted a permit to drill the SEDEX targets on the Stibnite Trail project in southeastern British Columbia, I declared, well, we'll be lucky if we see this stock below 30 cents. So I've been kind of mystified why, as presumably they are drilling now, the stock has dropped below 20 cents. It traded at 19 cents. An obvious explanation is, well, maybe drilling never got started. Another one is, drilling got started, but they're about to have to bug out because there are forest fires in the vicinity. So I gave John Keating a call, and he admitted, yes, drilling is now underway, and no, there is no forest fire problem at all, and everything's going great. So I looked at, on July 30th, I had gone to the Canadian wildfire website and grabbed some screenshots of what it looked like and explained that, well, there is one fire 20 kilometers east of the Stibnite Trail drill site, but it's several mountain or valleys away and doesn't seem to be a threat, and everything is okay. But the whole area was rated very high fire risk. So I went there today again and took another screenshot, and the whole area is blue, really low fire risk. And that fire is still burning. It's still designated out of control, but it has only increased from about 11,400 hectares to 11,900 hectares. So it's basically just burning itself out and expanding only modestly. And apparently the drill crew are not happy campers right now because they are going to have to keep drilling because it's pissing rain so hard there, the helicopter can't get up there with the relief crew. So for now, at least, this part of southeastern British Columbia, fires are not a problem. So if drilling's underway, fires are not a problem. First Nations haven't suddenly decided that this is sacred territory. Why has the stock dropped below 20 cents? And it turns out it's a problem that plagued many of the James Bay juniors last year as we headed into late August and September. So in late November, after the company had published its press release showing the boulders, the cut boulders that they had found at the base of the hill, which clearly showed this is an exhalative massive sulfide zinc lead silver system. It is not a vein system. It's coming from this hill. And people like myself saw this and said, wow, this is incredible. This might be the real Sullivan II outcropping somewhere up on the mountain. And but at that time, in the second half of last year, the whole market was in a very deep funk. Everything was selling off. And John Keating, the CEO, had a hard time raising money. But he did get an inquiry from somebody who had seen these results and seen my write-up. And this person's a specialist in flow-through funds, arranging flow-through financings. And so he ended up doing a flow-through component to the sort of just under $3 million group of financings he did late last year. So there were 13.8 million units of flow-through done at 10.5 cents. And this included a full warrant at 20 cents for 2 years. And I asked Keating, well, who took down this flow-through paper? And he can't tell me because he's bound by confidentiality rules not to identify who the placees are of financing. So I asked him, well, what percentage was taken down by flow-through funds as opposed to high net worth investors? And so he conceded, it was about 60%. So that means 8 million units went to flow-through funds. And apparently they started selling some stock in April as soon as it came free trading. but it has stepped up recently on the threshold of the company potentially announcing a major discovery hole that sends the stock into orbit. So what's going on here? Why are they stepping it up now? Well, the thing is, last year we saw this with the case of Dios Exploration, which was one of my bottom fish, and they had raised money through MarkWest. Now, I don't know if MarkWest is one of the funds that invested in PJX, but it's that sort of fund entity which raises money from individuals who all buy units in the fund. They have no idea what's actually in the fund. They're just doing a tax deferral strategy. They don't care about the fundamental outcome. And at some point, maybe at the beginning or maybe by some deadline, they have to elect whether they want to receive their share of the fund in stock or in cash, or maybe even a combination of stock and cash. And there's usually some deadline in the year where the fund distributes the cash and the shares to the fund holders. And last year, because how horrible the market became in the second half, the majority of people said, I want cash, I want cash. So the funds were busy blowing out the stock because they needed to deliver cash to the fund holders. And the way I think it works is, say you some fund, flow-through fund owns 1 million units of PJX, and your share of the value of the fund is, say, 1% at the time. So if you elected all of 100% shares, you would be delivered 10,000 shares of PJX when the distribution happens. So the fund manager knows somewhere along starts getting an idea of how much he needs to keep as stock and how much he needs to keep as cash. So the cash itself, it's not going to go away because they don't reinvest it. But the share price can go down. So they start selling the shares to raise the cash. And of course, for the poor sucker who said, I want the shares, they basically are buying a death spiral or asking for shares that's going to be hammered low as a result of this death spiral. So this apparently has now started to happen. And the bottom there is like 10 cents. The stock could go into the 10, 15 cents range, and the lid is now 20 cents because the warrant at 20 cents for much of this year when the stock was above 20 cents, say 30 cents, which I didn't think it would go below, well, those warrants are in the money. So they have to be exercised, and the cash also handed to the individuals who elect for cash. It's not clear what happens to the warrants that are left over if the individuals get them. They're not really transferable. If somebody can enlighten me how that works, I would really, really appreciate it. So all of a sudden, of course, John Keating tells me none of these warrants have been exercised that are associated with the flow-through financings. So what's happened is the fund managers are still liquidating the long position. And even when that is gone, until the distribution date, they will have a lid of stock at 20 cents. So this is a real bummer of a situation for like people who have bought this favorite, who have been hoping for a discovery hole. And with drilling just underway now, the earliest we will likely see any assays, unless something spectacular is intersected right away and rushed for assay, is probably late September, early October. And even then, it would be a single hole, and you wouldn't have a three-dimensional context. So it would be evidence of a beginning discovery, but not something where the stock goes to the moon. So we are now facing this deluge of structurally forced selling from these flow-through funds. And Keating's, he's just fuming because he's never done financing with this type of flow-through funds. PJX basically has a cult shareholder base. Many of these high net worth individuals who own this stock have been with the company for the past decade, and they just keep writing more checks, and they don't sell. And they understand this story. They're in no mood to sell. They're not warrant clippers who are going to dump their stock and keep their warrant. So the stock is actually quite illiquid. But now we are entering a window of liquidity from this forced fund selling. And there's a certain irony here that takes me back, 30, 40 years even. A few months ago, PJX appointed several people to its advisory board, and one of them was Chuck Fitke. And I asked, why did you appoint him? And Keating said, well, he likes the story an awful lot. And of course, he wouldn't tell me anything more, but I found out from other sources that when Chuck saw this press release in late October, around the same time I did, he said, holy crap, this is big, this is real. So apparently, he bought stock in the market and through the private placement. Now, how is this relevant? Well, back in 1991, November 1991, his Diamond Minerals was this cult stock that was engaged in diamond exploration, which Canadian investors knew absolutely nothing about. And the stock was relatively liquid, would be 60 cents or so. And while he raised money from, the people in Cologne and all that who were all true believers, he did also raise flow-through money through Ned Goodman's CMP group of funds, something similar to the ones that are around today. And in November 1991, when they published these macro diamond counts, that was all Greek to us. And in fact, later on, we found out that reporting format was absolutely useless and meaningless. The stock took off from 60 cents into the $5 to $10 range by the middle of 1992. And the selling all came from the flow-through funds because they didn't understand what this was all about. They said, oh my gosh, there's a bid at a higher price than what we paid for it. We're going to blow this stock up. So there was this window of liquidity where most of us there in the industry are scratching our head. How do you even think about diamond stuff? But from an international point of view, people who understood the diamond space and also knew that this wasn't just about some bogus macro-micro ratios. It was about the Hartsbergitic chemistry that underpinned the pipes then and the indicator minerals that they were finding in the area, and they had a rough idea of the scale of this. So this international group of investors was able to absorb all this flow-through paper that came out during this window of uncertainty. Everything changed in the middle of the year because then they published evidence of mini bulk sample and the stock took off. And by the middle of 1993, when they had announced a whole bunch of better pipes than the first one, the stock made it to over $60 from an original 60 cents. And that was like a huge area play that spawned around this. So here we are, 40 years later, and we have a similar situation with a potential world-class Sullivan II type discovery staring in our face. We have this situation, a window of uncertainty, where really hard evidence of a major discovery will not be available before there's need to distribute those shares. And most people have made the election. This market sucks, and they're correct in that. We want cash. Just get rid of this flow-through crap. We don't want it. So there's this window of liquidity, and it sucks to see the stock go back from 30 cents down below 20 cents and maybe even lower. But sophisticated investors understand what this is, and so they're going to be sitting there with their baseball mitts, catching this paper as it comes out and not chasing any offers until there is brand new information about the fundamentals on the table. And Keating has said he's not going to put out any visuals or anything like that. He doesn't want to do anything until he has assays confirming, yes, we got it. We've got the horizon where this massive sulfide mineralization exists, and the grades are similar to what we found in the boulder, in the talus at the bottom of the slope, and we're going to put this out then, but not before that.
Is Endurance Gold having fire problems this year at Reliance?
Endurance Gold does not have that problem this year. What we do have is a market that's spooked in general. Now, on July 8th, they started drilling at the Reliance project, and this week on August 13th, they reported that they had drilled 5 holes representing 1,854 meters out of a planned 10,000-meter program, and they were on the 6th hole, and these are all in the Imperial Zone, and the next thing that they were going to do was move the rig upslope and start drilling this 400-meter gap between the Imperial and the Eagle zones within this 1,500-meter long Royal Treasure Shear corridor that has intense iron carbonate alteration, and so far very good mineralization, gold mineralization. This is a gold play. And the market kind of just shrugged and said, oh, is this all you've accomplished? And it's already sort of mid-August, and the stock kind of did nothing. But it has started to creep up because the company's disclosures are really good in terms of like the graphics it provides to help the market understand what do they already know about this system and what do they still hope to learn with the drill program that they have underway. Now, the Reliance project has been described as an epizonal orogenic system, and it's the same kind as the nearby 5 million ounce high-grade Braylorn deposit, but because of the presence of antimony, they know that it is much higher within that orogenic system than at Braylorn. And the mineralization is also in a different type of structural form than at Braylorn, where it is in these high-grade veins that once you find them, it's relatively easy to drill them off. And in fact, what they've got there now, analogies have been made to the Fosterville system in Australia, which turned Kirkland Lake into an absolute winner when they finally figured out how all the high-grade gold hung together and helped make Eric Sprott a billionaire. So, but this stock, Endurance Gold, it has kind of just sort of slumped, done nothing. In fact, it was so bad that Richard Gilliam, the largest shareholder of the company, said, screw this stupid market. He wrote a $4 million check in May at 20 cents, which was at a premium to the market, and only asked for a half warrant at 32 cents. So that gave the company enough money with still a cushion in case the markets continue to be bad to do this 10,000-meter drill program. But there are two reasons why the market continues to disrespect the Reliance project. I mean, they have 86 RC holes into it already, 82 core holes. The RC holes are relatively shallow. The core holes are deeper. Many of them have high-grade mineralization, but the high grade tends to be below 1 ounce per ton. It does not have the flashy multi-ounce intersections that the Fosterville system has, or even what newfound gold is chasing in Newfoundland. And in order to actually get that, you need very closely spaced drilling. And given the relatively low market value, raising $50 million for close space drilling just isn't an option. The other problem with the situation now is that the market, people like myself, what we've seen so far, the mineralization within this corridor looks like it's the bars within the scaffolding that you put up next to a building when you're painting it or redoing the walls. And so that makes it really difficult to do back-of-the-envelope type of tonnage estimates. So whenever there's another new high-grade hole, the market just kind of assures, well, we don't know how that changes it because we don't have a base understanding. And again, you need more detailed drilling in order to sort of understand what the geometry is and to see what additional intersections mean for the tonnage footprint. Now, last year was supposed to be the turning point, supposed to be a major program, but the company lost 2 months because of the bad forest fires in the Braylorn region. And they got some strike extension drilling done on the Eagle zone, and then they moved down to the Imperial zone. They were going to go back and start drilling the deeper holes into the Eagle zone. And what the market really wants to see is that, okay, you have this epizonal orogenic system. You're very high in it. Somewhere deeper, you hope to find the Braylorn-style vein structures that are going to be high grade and that may have better continuity that you can chase. So drill those deep holes and show us these are there, or at least at what depth they are there, so that we can start start dreaming that all this takes is more money and drilling to finally deliver an underground mineable resource, perhaps with an open pit at the top. But because of the forest fires, they never got around to that deeper drilling. So I was a bit surprised this year that they started at the bottom of the slope where the Imperial Zone. The Imperial Zone is only a couple hundred meters of strike. And so they've been chasing that down plunge. And when they put out the press release, they indicated that all of the holes had hit mineralization. They didn't give any visual descriptions, which kind of are meaningless because this is all sulfide. You can't see the gold. You need assays to figure out what the gold grade is, and they didn't give intervals or anything. So we'll find out maybe in the second half of September what this graded. But even those results are not going to move the needle. But when I talked to Robert Boyd the other day, the CEO, he was quite upbeat. And one of the things that I sensed was that they're really starting to understand the geometry better, the plunge of the system. When you look at the longitudinal section that they've put into their corporate presentation, you can see that upslope of the Eagle Zone where they started drilling down the plunge. The holes are kind of like no good below whatever grade they want to be significant. It's all little black dots. But when you go downslope, it's basically untested. And they've helpfully showed what they think now is the plunge of the system, of the Imperial system and of the Eagle system. And the goal this year is to test this part where they now think it's plunging. So based on what wasn't accomplished last year and what was disappointing, they now have a better understanding. But the next step is interesting. In order to drill the deeper part of the Eagle and the Imperial, they had to build a network of roads to the northwest of the shear zone. And that means drilling through the post-mineral cover rocks, and this road has to zigzag all the way up to the Eagle Zone. And so it goes past this 400-meter gap between Imperial and Eagle. And this gap has never been drilled because, frankly, there's nothing exciting at surface. But one of the things that Robert said that really resonated with me was that they now believe the entire core to all the mineralization, what's at Imperial, what's at Eagle, it's all the same system. So the way these scaffolding type things work, you don't have to have this vertical continuity. So it could be that this 400-meter gap, what happens to be exposed at surface, is simply an unmineralized portion. So after the sixth hole is done, they are moving the rig into the gap where the roads now zigzag past, and they're going to drill several holes there. And if we do get a press release saying they have encountered mineralization, that will move the needle because that means there is continuity, structural continuity of the mineralized zones between the Imperial and the Eagle zones. And because they're only using one rig, and upslope, you have a shorter drilling season because when winter comes, the snow, of course, starts higher and comes down. They're going to move the rig to the Eagle Zone and start drilling there. And they'll do this, whether they get interesting mineralization or nothing at all in the gap, they'll move it there because that's what the market is waiting for. They're waiting for those deeper down plunge holes in the Eagle Zone to see what happens as you chase this deeper. Now, they've only got a couple thousand meters done out of a 10,000-meter program. And you ask yourself, well, what are they going to accomplish with one rig if it took them almost 6 weeks to get 2,000 meters done? Well, they do have the option and the money to add a second rig to the program. And they'll spend a couple of weeks, I think, on the gap. And while they wait for assays and that, September, October, they'll be working on the Eagle Zone. And if the gap also comes through, then they'll probably get a second rig and start chasing that also because the roads are now in place to chase this system deeper. And they've been working on this for 20 years and they've always had to drill from the footwall side of the system, and the system dips to the southwest. So this was kind of drilling at the wrong angle. Now the road network's in place for them to access the system on a reasonable perpendicular angle. So I think that the stock has started to creep up. I don't know whether that's because investors are starting to understand that we're finally in the zone where game-changing results could happen, or whether they're finally starting to look at the price of gold and say, Why doesn't gold go back below 2,400? Why doesn't it go back below $2,000? Why does it keep hanging up here? It could be a combination of that. The markets have been better in the past few days. So we'll see if we are at a turning point for this negative bear market with regard to resource juniors. And Endurance Gold, PJX, they are both excellent discovery exploration juniors to surprise on the upside with what they're doing over the next 2 to 3 months.
Why has Perpetua Gold risen in recent days?
Perpetua Gold has hit $11, and it is not because of gold. Now, we have started calling this company Perpetual Permitting Corporation because they should have had a final record of decision and a final environmental impact statement a couple years ago. And I think that might have happened if in late after Stephen Quinn and his team published a feasibility study in late 2020. If afterwards John Paulson hadn't fired the team and put his own people in place. Now, what's happening with the Stibnite project, which is in Idaho, it is a sign of this crazy anti-mining attitude in the United States. Now, one of my biggest complaints with the Biden administration is that they appointed Deb Haaglund as Secretary of the Interior. And she is a NIMBY person who, for some reason, oil is okay. Apparently, last year, the United States licensed 758 oil wells, but they've been absolutely slow peddling it with regard to permitting mineral extraction. Now, the United States is is the world's largest producer of oil. So there is no problem. It's also one of the biggest producers of natural gas. In fact, in Texas, they have so much of it, they have to give it away. There's no way to deliver it to the market. So why there is all this support for drilling for oil wells, but not for the mineral sector, it baffles my mind, because I've got this great graphic which shows all the 50 raw materials out there, and it shows what percentage China and Russia combined supply of each and what percentage America supplies. And the only one where America wins hands down is beryllium, which is like a $250 million market a year, and there are substitutes for beryllium, so it's not exactly essential or really critical. So why is there this anti-permitting attitude entrenched in the U.S. Forest Service, in the Bureau of Land Management, the BLM? It boggles the mind. Now, the U.S. Forest Service had said that they expected to have the final environmental impact statement in the second quarter of this year, and a final record of decision at the end of this year. And of course, they didn't make their second quarter deadline. So now they're saying, well, it'll happen in the third quarter, but we're still hopeful for the final record at the end of this year. Now, the problem with the Stibnite project is that since the feasibility study has been published, it has not been updated. And there have been changes required as part of the permitting process. Plus, we have seen inflation. So we do not know what the cost structure is of this mine. However, $2,400 gold, as I've seen when we run the numbers for Vista Gold, which did its base case feasibility study update at $18.50 or so an ounce, at $2,400, it really flies. So I suspect that even with the cost changes, the Stibnite project will still be in the money and worth developing once that permit is in place. But even then, it'll take a couple years to get this thing into production. Now, why does it matter? It's a gold deposit. Well, it isn't. Back in World War II, it was an antimony mine. Antimony is a war metal. A good chunk of its usage is for as a fire retardant, and it's apparently also part of an alloy that's used for bullet casings. Now, when you look at the supply of antimony until 1985, it came from a variety of places. China had maybe 25% of global supply. But beyond 1985, China developed an area that had some really good antimony mines. And at its peak, it was 85% of global supply. Now, that was when we had the wonderful globalization concept, and China was still friendly, and they were going to become just like us. But that all changed with Xi Jinping. And in about 2015, you can see the global supply of antimony go way down. And this year, the price took off. It's now at a record high of about $9 a pound. So what has happened? Well, depletion has affected the Chinese ability to supply, and as they have done with graphite, germanium, and gallium, they have now introduced an export quota for antimony, and that's a huge problem. China now is 48% of supply, but 25%, the next largest supplier, is Tajikistan, which is one of those former Soviet Empire countries with its own little dictatorship, and that's part of the Global East Alliance. That's not a friend of the Global West. So we have a serious antimony problem, and Perpetua stock has gone up because it has antimony as a byproduct. And when I visited the project back before they chased Stephen Quinn and his team out of there, we were told that outside the pit wall, which is gold with a minor antimony credit, there is a high-grade antimony vein, and in the case of an emergency, we could drive an adit into this and high-grade this vein as an emergency supply. But you're not going to be able to do this unless you have the whole thing approved and ready to go. So the Stibnite project, and again, the Stibnite mining back in the World War II, it made a mess of the place, and then some gold mining made a bigger mess of the place. The whole project is a giant reclamation project funded by a gold mine, plus providing security of supply in the form of a meaningful antimony supply that will be bigger than whatever America's needs are, but can also supply the rest of the global West's need. So the stock has gone up because people realize that with this conflict between global West and East only getting worse, there is going to be an antimony supply problem, and the powers that be are going to eventually wake up and say, we need mining. And this has been my hope for the resource juniors, because when they finally get serious that the supply, we are super vulnerable to supply from places that don't like us, we're going to have to mobilize the finding and development of more minerals. And we're in a horrible bear market for Canadian resource juniors. The United States is trapped in this horrible NIMBYism, which Deb Haaglund, helps foster from Washington, D.C. by, sending a signal, don't rush with these things. We don't really want mining. Let that happen in other jurisdictions. And in Canada, we have the fascination with UNDRIP, changing the First Nations into an aristocracy that owns 4 times of Canada and has the last say on everything, turning permitting cycles into a nightmare. This is the thing with PJX. That permit should have been in place by May. Instead, it was like July because of all this consultation merry-go-round. And even when they granted it, it took they needed to do an extra special sweep of the project to look for endangered species near where the drill sites were going to be, and that resulted in them losing the pad building crew, which went to another job. And so then when they had the sweep done, they had to wait some more. So we have this program delayed, just barely starting in August, and coinciding with the selling from the flow-through funds, which have to liquidate. And if they were drilling by June, as they had planned, we would know by now whether we have it, and all that paper would be easily absorbed by new investors coming into the market. This anti-mining attitude has to change.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.